What's going on, everybody? Stopping in for a quick uh, NASDAQ review. Yes, I shaved the beard. Anybody who knows me, has known me for a while knows that I grow them and then I get tired of them and I shave them. Um, so, just a real quick review on NASDAQ. Uh, if we go to the daily chart, this is what I'm working off of for my bias. Um, we had this nice push down that swept liquidity off this low and then had a nice big pullback. And then we had a very strong displacement move. No sell candles in this displacement move that broke structure. This is very nice displacement move. Um, and then we started the pullback. So I put a fib on the pullback because this is the exact setup. We take liquidity. We have a push down that takes liquidity. We have a reversal that has a strong displacement move that breaks structure. And then we have a pullback to the 6-2 or the 7-0. And then we reverse to go up to the 2.7, which is back at all-time highs. Um, so, what is the difference of me being bullish as to saying, well, we had a pullback on this move. They couldn't get past the 7.0. I've already done a fib on it. This is the 7.0 on that fib right at these highs. We couldn't break the 7.0 and now we've rolled over. Was to say that that fib doesn't go down to the 2.7 down here somewhere. Well, the difference is the strength of the moves. You can see that in this move down, there was a lot of consolidation, a lot of or a few buy candles in that move down. In this move up, we have very little consolidation, and it's one-sided. It's all buy candles. Okay, so this is the much stronger move. So this is the one I'm putting the fib on for a retracement and then continuation higher. We've broken structure. We're no longer in a downtrend. This break of structure means that we now should be in an uptrend. The only thing that will cause that to fail is to come down and break these lows. Okay. And we'll see that happen if it happens, but I doubt it will. Um, this is the perfect move. This is what we look for. A move down that swipes liquidity, a strong one-sided displacement that breaks structure. After a break of structure, you always have a pullback. This pullback is now at our key levels. Where is it exactly? Well, let's take a look. We have swiped, we have a 4-hour fair value gap here. We have another one just below it. I just haven't marked it out yet. Um, but we have this 4-hour fair value gap. We came into it. That is at the 6-2. There's a 4-hour swing level. We have the 6-2 retracement. We have the midline of that fair value gap, which we almost touched, but not quite, and then had a pullback. So I am looking for this to be the reversal. Okay. Um, and what I'm going to look for is something on a smaller time frame. I'll show you that in just a minute because I've actually already got it set of what I'm looking for. And we'll see what happens. So if this level fails, okay, and what I'm thinking of doesn't occur on Monday, then I will be looking for us to come down to the 7.0. The 7.0 is the 50% mark of this fair value gap of below it. Let's go to the 4-hour. Let me show you what I'm looking at. Um, we have this bullish fair value gap right here. And underneath these two bullish fair value gaps, we have an inverted 4-hour. Okay. So we have an inversion. We have two bullish fair value gaps. We have the swing low. We have the 6-2. We have the midpoint of the fair value gaps. This midpoint on this fair value gap happens to be um, right below the 7.0 of the daily fib retracement. Um, so we have two very good areas here. The only thing we're missing from this uh, fair value gap is a swing low. But there is something else of interest here in this fair value gap if we get down to it. All right. So what I'm looking for is this one to reverse from the 6-2 and not getting to the 7-9. What does that look like? Well, I'm looking at the 10-minute chart. Okay. Um, and I know it's not a level I typically use, but in this case, I'm going to use it because it gives me the best trade setup. Okay. Uh, and this is something you really should look at. Look at different, when you're looking at your setup, if you're trying to find the best trade setup with the lowest risk, the tightest stop loss, uh, that will either validate or invalidate your trade so you get the best profit out of the trade. Um, then look at different time frames, and I'll show you why. The 5 minute, you know, possibly, but for the 5 minute to tell me anything good, our first fair value gap is right here, and it's a really small one. What I would really be interested in is if this fair value gap gets inverted right here. Okay. Well, if that fair value gap gets inverted, then I'm entering around 18,427. And where's my stop going to be? Well, it's going to be at the bottom of that inverted fair value gap, um, which would be about 20 points. Okay. A little bit more maybe because I got to give it a little bit of room. All right. But if I look at the 10-minute chart or even the 1 minute chart, let's go there. We've already had a market structure shift and we've already broken through two fair value gaps. Okay. Um, Now, market structure shift. What do I want to see there? Well, I want to see the pullback. Okay. Did we close? We did not close above the level yet. So we still need another candle to close above that level. And then we're going to look for a 6-2 replacement. Well, where is this going to pull back from? Well, if we have to close above that level, we're likely either going to pull back from this order block, okay, or a break of the high, right? So let's just say we break the high and we pull back from there, okay? That's 387. Let's take a fib and go from the low to 387, okay? We break it, just barely break the high, and then we reverse. All right, let's put the right fib up, the 6-2 retrace. Oh, come on. Let's just do that. As the 6-2 is going to be right around here. That's going to give me an entry at around 350, 350, 618. We go a little bit lower than that. Around 356. And my stop's going to have to be at 337, a little lower, 336. So that again is going to be about a 20-point stop, right? All right. So let's go to the 10-minute chart. And let's take a look. All right. All I need on the 10-minute chart is for this fair value gap right here to be inverted. Okay. Now, if we get up here and just say we're up in this area somewhere with less than a minute to go, I can go ahead and enter that trade on the anticipation that we're going to invert that gap. It could pull back and we don't invert it, and I can exit the trade. Okay. 386 to uh, that's like 14 points that I would lose. All right. And then I would have to wait and see what happened again. And this is where I take my paper cuts. I have no problem taking my paper cuts. Okay. But that is a very nice buy wick with an up close candle above the body of the last candle. Okay. Um, good reversal signal. All right. So I'm willing to take that chance on that fair value gap. Now let's just say it closed right here, just inverting the gap, right? And I can enter right there. Well, that's 392. Where's my stop going to be? Below the inversion. Going to be a little less than 20 points. Okay. But the size I trade, 5, 6 points, can be, $1,000. Of course, my entry is only going to be 5 micros. It's not going to be that big. I won't be adding until we break this fair value gap. Okay. But if we invert this one, we shouldn't go lower. We should go higher, which means inverting this fair value gap as well. So I have a few signals on the 10-minute chart that can really tell me whether to stay in or get out of a trade and not lose a lot of money, especially on 5 micros. Okay. So I'm going to be watching the 10-minute chart. If we invert this first fair value gap, I'm in the trade. Okay. Then it depends on what we have to do on this fair value gap. If we invert it, I'm adding to the trade because now guess what? We're back in that range. Okay. And this was the manipulation move to go higher. Right. The last fair value gap is right here. We invert that one. I'm adding to the trade again. And then when we get up to the high above the range, which would be this one right here, I will start scaling out to see what happens above that. Another inversion means another add. The previous high to the next fair value gap will be some profit taking. If we invert that, we add, and so on and so forth. Okay? So that's basically what we're looking at. And that's what I want to do come Monday. Now, should this fail, okay, let's just say, we invert this first one, we can't invert the second one, we fail below the 6.2 and we close below the 50% mark of fair value gap. Then I'm going to watch price for the long because then I want to see for sure we break above these highs. We sweep the liquidity, not only sweep it, but we displace through it. Okay. Because if we just sweep it, then we could come down again and hit lower. So that's what I'm going to be looking for. If this move fails, I'm looking for this fair value gap down here at the 7.0 on the daily fib. If we go to the 4-hour chart, I can just, I can show you, mark that one out. Um, what I do here is, that's for the 4-hour. But what I do is I will take a fib, I will put it on that gap. I will use my 0.5 gap fib. Actually, uh, yeah, it should be default. Yeah, my default fib. Oh, so, okay. Don't need the 2.5 on there, but that's fine. What I do here is I take my lines, I take the fair value gap high, I have a template for that, lock it in. Then my 4-hour fair value gap midpoint. Lock it in. 4-hour fair value gap low, which is here. Lock that in. And those will show up on any time frame. Okay. So this is the fair value gap we're in right now. This is the fair value gap below it. The 7.0 is just below the midpoint of that fair value gap range. That is not correct. Let's go back to the 4 hours. Something's wrong there. Did I put it on the 2.5? I sure did. No, I didn't. That's the high of the gap. Oh, my fib is my fib is right. What the fuck? Oh, I did put it on the 2.5. It does some shit. Unlock that. The midpoint is right here. There we go. I say I looked at this earlier and that wasn't right. So let's lock that in there. And then we'll go to our 5-minute chart or our 10-minute chart, which is what we're going to be watching for the first part of tomorrow. And what we have is the fair value gap we're in, and then the fair value gap below us, where the midpoint is just below the 7.0. So we should not close below the midpoint of that fair value gap if this one fails. And that will be a 7.0 retracement on the daily, which is a perfect reverse point. So there you have it, folks. That's what I'm looking at. I hope I made sense. And also, the funded account I have that I've made $60,000 in a month. Still doesn't seem real to me, but I'm not going to be trading that anymore. I'll trade it enough to keep it alive over the next few months, but that account is now going to sit there until I retire, and I have that account to trade for profit. Now my goal is to get more combines passed, get them funded, and get those buffers built up. I currently have this one, which is halfway to passing. I have two others for a total of 900,000. And then my funded account, if I get them all funded, I will have $1.2 million in funding capital and about $80,000 worth of drawdown spread across those accounts. $7,500 drawdowns in the brand new accounts, 60,000 in the funded account that I have my buffer already built in. So the goal is to get these passed, funded, and buffers built so that I have four $300,000 accounts with buffers in them that I can spread risk over. So I can trade smaller on one account, copy trade it over four accounts. And if I make $1,000 in one account, which at this point just seems way too easy. And I don't say that with arrogance. It's confidence. What I have seen, what I have done, what I now understand about ICT and how the market moves, I, obviously there's going to be losing days. I always have losing trades. I mean, I go into drawdown almost every day. Be the first one to tell you. This ain't just start trading, make a shit ton of profit, quit for the day. I'm working these trades. I take my paper cuts. Okay. But to actually make $1,000 out of the market at this point seems super easy. If I can do that over four accounts, $4,000 a day, hey, and there's going to be days that are going to be bigger than that, you know. But I want to keep my minimum profit at around $1,000 a day. If it was a rough morning and it took me some work to get to that $1,000, I can call it a day. If I make that $1,000 right off the bat, I'll probably go for more. Um, and see what the market will give me that day. Maybe there's a really good move. Some days are high resistance liquidity grabs, and those are a pain in the ass because it just whips back and forth. Um, but I want the minimum to be around $1,000 profit because that's the most I want to lose in a day. So I'd like to have my minimum profitable days as big as what I want my losing days to be. Now, I have had days of more than $1,000 loss, but that's what I really want to try to keep my losing days at. Um, Maybe impossible. I may need to change those numbers because if I start trading, you know, full mini on an entry, I may have to risk, $1,000 on that one trade. If that trade doesn't work out, I'm not going to stop for the day because I'm going to have other opportunities, and more than likely will work because my win rate is good enough. My win rate, by the way, is only, around 41, 42%, but I have close to 90% winning days. Okay. So even though, my individual trade win rate is not good, um, a lot of it is because I'll cut trades quickly and take the loss and wait for the better entry, um, and then take the trade and it worked and I make back my losses plus my profit. So, I may take two or three losses before I actually catch the real trade. I'm working on that. I'm trying to find the patience, um, to wait out and maybe even miss some trades, um, to wait for the better entries. Okay. Um, the market starts to show me something. It looks good. I take it. It fails and I take a loss. I do that a couple of times in an area where I know I need to be trading and I know what should be happening in the market. And I take those couple of losses and then the trade, I take a trade and it actually works that time. It's the same trade area, same trade theory. I just could have waited for the better entry point where the trade actually started working in my favor. Um, Either that or I need to size down and have wider stop loss so that I just stay in the trade with less of a loss. And then when it actually starts working in my favor, then I can start adding to the trade. Um, but it's a work in progress. I've gotten to the point where I know I can make money in the market. I can make really good money in the market. Um, but I need to refine my trading to where where I cut out some of those losses, and that will exponentially grow my account. I don't need to trade any differently, than I do. I just need to cut down those paper cuts. Um, and that in itself will be huge to my P&L. So, yeah, that's the plan. Get these other three passed, um, get them funded, and work on their buffers, so that when I retire in February, I have four funded $300,000 accounts, uh, with buffers that I can trade for a living. Uh, and then I'll probably even break them down into twos. I'll probably only trade two accounts one day, two accounts another day, so that I'm never at risk, of losing all four on a catastrophic day. Uh, and also throughout the process, I'm going to keep passing combines, uh, and working on those through trade copying, passing them and getting their buffers built through trade copying on my funded accounts, so that if I do happen to blow a funded account at one point or another, then I will always have other accounts to trade. So we got a plan. We got a plan, Stan. And we're getting there. Uh, Super good start. Surprised myself even, but it is just, validation of the work that I've put in, the time that I've spent learning what I need to learn, um, and doing what I need to do. Um, that's why I say, if you're somebody trading a different system and you're having trouble, you're not passing your combines, you're not keeping your funded accounts, or um, you know, you've tried everything you can uh, within that system, there is nothing wrong with going out and finding another system. I've probably traded 6 or 7 systems in 3 years. Okay. Um, and I finally found the one that works for me. I found a mentor in Casper SMT that trades ICT concepts, teaches it very, very plainly and clearly, um, and does it all for free. You can go on his YouTube channel, and he's got a full course that'll teach you the entire ACT system uh, in an hour. So you don't have to go through, 100 hours of Michael, the ICT trader, uh, through his videos to learn it, which is just a lot of rambling, making things more difficult than they need to be. Casper breaks it down very simply and then gives you multiple strategies to trade within the ICT system and explains them all very well. Gives you some risk management uh, tools to work with, and he does it all for free on YouTube. He does have a mentorship program. I am not entering it as of yet. If I can't on my own reduce my losses, I may at some point go ahead and take a payout sizable enough to join his mentorship so that he can help me get those losses down, uh, take fewer losses. I'm not looking to make my wins bigger because obviously anytime you can make a $10,000 day, you don't need to make your wins bigger. Okay. I need to reduce the amount of losses I take to get my win rate up above 50%. And then that will exponentially change my P&L. That will make my P&L grow faster without having to make my wins bigger. So at some point, if I can't do it on my own, I will join his mentorship and let him guide me through that process. But as of now, right now, I've done pretty good learning on my own through him and his free stuff on YouTube, which, like I said, I mean, he gives it all away. Uh, the only thing a mentorship does is it shortens the learning curve. Um, if you find a person like Casper, like ICT, they give it all away for free on YouTube. All the information's there. You just have to do the work uh, and learn it and practice it and trade it and get good at it. Plain and simple. Uh, a mentorship will help reduce the learning curve, or in my case, the one problem I still have left is reducing my losses, reducing those paper cuts, right? So if I can't get that done on my own, if I can't figure that out on my own, then a mentorship would be the way to go to actually achieve that. Because then you have somebody who knows how to reduce those losses because they've done it and can show you and hold your hand to help you do it yourself. Um, so yeah, that's my thoughts on that. All right. That is it for today. That is NASDAQ. That is my ideas. I am looking to turn bullish at either uh, beginning of next week or when we go down and hit the 7.0 on the daily fib level. We're at 30 minutes. Perfect. Um, I will do some more videos this week end before the Asian Open. At least one video, probably marking up charts on all my other assets that I watch. Um, because basically what I want is when NASDAQ is in a 15-minute, 30-minute range and it sits there for several hours, I want to look at other charts and see if a different asset is at a key level that I can look to be trading at, where it's in distribution or it's just made its manipulation move out of a range to go into displacement. Um, so right now I'm looking at MQ, the Russell, oil, the euro. I will add gold and the Dow Industrial, and that will be 6 assets that I can watch um, and should pretty much always have a trade opportunity. Yes, I'm a trading addict. I love it. Um, and I don't want to sit through 2.5 hours of NQ consolidating when something else is in distribution and I could be making money. So, all right, I'm going to cut this one off. Probably do the other video tomorrow morning before the Sunday Open, and I will get that one out as soon as I get it recorded. So, uh, oh, one other point. I know I just went over 30 minutes, but I'm gonna make this quick. I am going to be live in one of the two video channels, and actually, I think I'm just gonna uh, kill one of those channels and just have the study time channel. Um, I'll remove the general channel. Um, but I will be live in there sometime, be coming on sometime in the London session, and I'll be on through trading the New York session, at least the New York AM session before I end it. Um, just to let everyone know, in case you want to come in and watch, um, if I am live and you see that my microphone is muted, don't freak out when I say this, but I trade while I'm driving. Okay. Look, I've been driving a truck for over 20 years. I have an almost 8 foot wide dash, okay, with a very big area where my laptop sits that does not block my view from anything. I have a mouse in my lap that is a one-click entry trade method. Checking the charts of where they are every once in a while is no different than looking at my fuel gauge or my speedometer or anything else in my truck. Um, this is done safely. This is not me holding my phone while I'm going down the road trying to trade. Okay, like people checking Facebook. That's dangerous because you take your eyes off the road for too long of a period of time. My eyes are always on the road. I am glancing at my charts. I mean, when you drive a truck, here's an example. When I drive a truck, every 5 seconds, I should be checking both of my mirrors, okay, for traffic and truck control. Make sure I'm in my lane, right? All right. Also, I have safety systems on this truck. When the cruise is on, it has automatic braking. If I get too close to something in front of me, it will start slowing the truck down. If it's an emergency in front of me, it will actually stop the vehicle. I have lane warnings. So if I get too close to one line or the other in my lane, a buzzer goes off in my truck. Rarely. Now, never does the automatic braking come on because I'm aware of what's going on. Even during the normal course of a day, I will get lane warnings because we drive very large vehicles in not so large lanes, okay? Um, but for the most part, those never go off either. Um, so this is done safely. Don't anybody freak out about this, okay? I know what I'm doing. But the point is, if you see my mic muted in a live session, it is because I'm driving. I am not going to be discussing what I'm doing or my thought process through it. Okay. Um, I may be talking and you may see my little box light up green because I also have OBS, which you see on the screen right now. I have OBS running and I record my trading sessions. And I do talk through to myself why I'm taking a trade and how I work through that trade process, because I want to review that later. So you may see me talking, but my mic is muted because I am driving. I don't want to answer questions. I can't answer questions. That would be unsafe. Having to switch back and forth to Discord from the charts and all that bullshit. No. Um, so just know that if my mic is muted during live session, I am driving and I am trading. Everything's okay. Um, Once I stop, whether it be for a break or I'm at the end of the day, or whatever, depending on my work schedule, the beginning of next week, I should be stopped during the New York session and we'll be able to answer questions, chat a little bit, and uh, explain my trades. But once I get stopped on the days that I'm muting, then I will unmute if there's anybody in the Discord that wants to ask questions or anything like that or discuss trading, show me their trades, whatever. Um, then we can discuss things then. If I'm driving and you want me to answer a question about a specific trade that you see me take, you know, just ask the question in the, the video chat room, the chat box in that video room. I will get back to it and answer that question when I get stopped. Okay. Um, but at least that puts a timestamp on it so that I know, what trade you're talking about, what entry you're talking about, or asking about, or anything else. So, um, yeah. All right. That's it. That's all. I got nothing else until I do the other video tomorrow on the other assets. I do need to mark up all my other charts. I don't think I've touched them in a while, because I've been making all my money on NQ. I haven't had to, but do need to get it done, and I need to do it every day. Um, I need to you know add new levels and such, take off some levels every day on my charts because these levels don't stay the same. They get broken, they get run through, they need to be taken off, and new levels get made that need to be put on. So uh, I've got to find the time in the morning to make that process happen, not just on NQ, but all my assets. So, all right. Hope everybody's having a great weekend. Uh, I will do my next video tomorrow morning before Asia Open and get it posted. Until then, have fun, have a blessed day. Hopefully, I'll see everyone on Monday trading well. Take care, everybody.